Right, let's have a look at pound Aussie. Now, some of you know I took some pips, quite a few pips off pound Aussie a while ago, but it's kind of a good example of how patient you have to be, but also how important taking three while risking one really is, and it really proved itself with this pound Aussie trade. What happened was I was looking for buys in the market. I was waiting on a buy, and I had a number of opportunities to buy on the way down. I actually had two. So there's one here, which it was a, this isn't the best bar whatsoever. It just makes a low. It then just makes a high there. In which case I thought, nah, it's worth a go. Probably getting a bit more impatient than anything else. It goes with me initially. It goes nearly 100 pips with me, and then falls back down and hits a stop. So about 250 pips stop on that one. As you know, pound Aussie is much like pound yen. It does move, a considerable amount of pips more than most other markets. So that's kind of amplified. I was trading it at half my normal trade size, so it's the equivalent of about 125 pips really. So as we go down again, we get some more bars which threaten to look good. That bar threatens to look good, but didn't break the lows. That one doesn't beat the highs. This one here, I said, right, it's kind of made, it's made a low beating that bar, but it's also kind of made a bit of a double bottom. I'm going to have a go at this one as well. Again, being a bit impatient. I just about get touched in there. Straight away, it doesn't even go my way, falls straight against me. And I take another sort of 300 pip loss there. So again, that's around about 150 pips in real terms. So then I get down here. Now most people would be now put off. They've taken two sizable losses on a market which is just pouring against them. But my rationale was every bar that it moves further away from that 200 is more pips I'm going to make when this finally does come right. Now, as it got down here, I saw the same pattern as I saw back here really. The market goes to make a new low. It actually does just about make a new low there. Goes up, beating that bar, and therefore I get in. Now, as you see on my probably Instagram, I had half my normal trade size on this. I was risking around about 240 pips, in which case I was shooting for 700 pips. As it goes up, we see it's non-stop to 700. Goes there almost straight away. In just about a week, 700 pips banked, which puts me about 250 pips up overall with those two losses. Not only that, I stayed in for a bit longer as well, and I managed to take 850 pips as we got up to these levels as it come up towards the 200. That's how confident I was. But that's where it goes to show, if I was just trading at 50-50, 1-to-1, if I was risking the amount that I wanted to take, I would have taken a 250 pip loss there, a 300 pip loss down here somewhere, and on this one I would have just banked 250 pips. So that's the importance of shooting for at least 3 times what you're risking in each market. It allows you to lose a couple of trades, get caught out by falling markets that are trending viciously like this was for a while, before reaping the rewards when they eventually beat the trend and go in your direction. Yeah, so a really good example of how to use that 3-to-1 to your advantage.